Again, this is an easy question. The following is the information of XML Limited related to the year ended 31st March 2018. GP is 20% of sales, net profit is 10% of sales, inventory holding period is 3 months, and receivable collection period is 3 months. Non-current assets, that is fixed asset, to sales is 1:4. Non-current assets to current assets is 1:2. Non-current liability to current liability is 1:1. Share capital to reserves and surplus is 4:1. Non-current assets as on 31st March is 50 lakhs. Assume that no change in non-current assets during the year 17-18, no depreciation charges on non-current assets during the year 17-18, ignoring tax. You are required to calculate COGS, net profit, inventory, receivables, and cash for the year ended 31st March 2018. Alright, I am having GP rate, yes. So if I get answer of sales, I can easily find out COGS. Alright, let me first start with nominal figures that are available. Non-current assets. Non-current asset is same as fixed asset, right? Non-current assets ratio I can take. Non-current assets to sales is 1:4. So fixed asset to sales is 1:4. What is fixed asset? 50 lakhs. 50 lakhs into 4 is equal to sales, which is 2 crore, is equal to. So I got my first answer, which is sales, but I need COGS. COGS is the sales minus GP. So what is sales? 20 lakhs and GP is 20%. So COGS is nothing but 16 lakhs. Alright, so this is as simple as this. Or you can find out sales, you can find out GP and reduce sales minus GP, you will be getting the answer. Non-current assets to current assets. So this way I will be getting answer of current assets. Fixed asset to current asset is equal to 1/2. Fixed asset I am having? No. So yes, fixed asset I am having 50 lakhs. So 50 lakhs into 2, 100 lakhs will be is equal to current assets. So current asset is 1 crore rupees. We use this formula, I have used this formula. Current ratio is the 2:1. Current ratio is the 2:1. Current ratio is current asset divided by current liability will be 2. Current asset is 100 lakhs. So current liability will be 50 lakhs. I don't know whether it is asked or not, but let us use all the formulas and find out the relevant figures. Share capital to reserves and surplus is 4:1. So share capital and reserves and surplus, that is to be found out or not? No. We have found out cost of goods sold. We need to find out net profit. That is easy. 10% of sales. Net profit is a sales. Sales is 200 lakhs multiplied by 10%. That is 20 lakhs. So I found out net profit. I need to find out inventory. Can be found out from inventory holding period. See, what is inventory holding period? Concentrate over here. It is inventory turnover ratio in months. Is it in months? Yes, 3 months. So it is inventory turnover ratio but in months. How do you find out? 12 divided by inventory turnover ratio in time. You can refer the formula. This is how we find out if we want to find out inventory turnover ratio in months. This is in months. What is the answer in months? 3 months. 12 divided by inventory turnover ratio in times will be 4 times. Inventory turnover ratio will be 4 times. See, this is calculation which we are doing it mathematically, but it is very simple. If inventory turnovers every 3 months, in 1 year it will turn over 4 times. How many 3 months are there? 3 months, 3 months, 3 months and 3 months. 4 times. So in a year it will turn over 4 times. What is inventory turnover ratio? COGS upon closing stock. There is again no information of opening and closing which we can find out. So I am taking it as a closing stock. Is equal to 4. COGS we are knowing? Yes. It is 16 lakhs. 16 lakhs divided by 4 is equal to closing stock. Will be 4 lakhs. Closing stock will be is equal to 4 lakhs. I don't know it was asked or not, but yes, it is asked. Inventory. Receivables. Receivable collection period is 3 months. See, debtors collection period is 3 months. I find out by my normal technique. Debtors is equal to credit sales into 3 months, then it is 3 divided by 12. This we have learned more in accountancy, but you can do it by debtors turnover ratio also. Sales is cannot be divided into cash and credit, and hence whole sales is assumed as credit into 3 divided by 12. So this will be 50 lakhs. So what will be debtors? 50 lakhs rupees. That is what is asked. Receivables is 50 lakhs rupees. And cash for the year ended 31st March 2018. Now cash cannot be found out unless you draw your balance sheet. Are you having answer of your fixed asset or non-current assets? Yes, 50 lakhs. Are you having answer of your current assets? Yes. Current assets are, we have found out. Current assets are 100 lakhs. We know portion of debtors? Yes. What are debtors? Closing stock is 4 lakhs and debtors are 50 lakhs. Debtors are 4 lakh. Debtors are 50 lakhs and closing is 4 lakhs. Then what will be cash balance? Remaining 100 is current assets, 54 is other current assets, then 46 lakhs will be nothing but cash balance. So we can find out the last point, that is cash is rupees 40. Sir, why not to complete balance sheet? Because they have not asked balance sheet in this particular question. They want only cash balance can be found out from this. Or you can write down this equation. Current asset is equal to closing stock plus debtors plus cash. This is available, this is available, this is available. You can find out cash and you don't even need to draw a balance sheet to understand the concept.